cable rate kind of holding around its lows at 131. What is the range we're going to have to keep looking at here as Brexit uncertainty heats up?
Well, of course, as Guy mentioned, we're just over a week away until we might have a hard Brexit. Now, I think if we look at the value of sterling in the year to date, it is the best performing G10 currency still. And I think that affects a bias. That there has been, I think, a bias in sterling to reflect the fact that the market believes a no deal will be ultimately avoided. That has been the consensus all along. But of course, we are just over a week away. The probability of a hard Brexit is still there. And I think the downside that we're seeing in sterling, over the last day or so, does reflect market concerns that actually a hard Brexit could still happen. So we need to focus on Monday. We're now being told that a vote in the UK Parliament on Theresa May's deal could again take place on Monday. That's really going to be the big focus, because if she does get enough votes and the deal is passed, well, yes, there will be relief in the market. A no deal will finally be convincingly off the table. But of course, if she doesn't, well, what's going to happen then? I think sterling could really begin to react negatively, unless there is news that the UK Parliament could potentially revoke Article 50.
Right. So, Jane, from the BOE's perspective, when is the BOE going to start to matter for markets again?
Well, really, I think it depends when we know what is definitely going to happen with respect to Brexit. Because if sterling does take a significantly leg lower, and that would be, of course, if there was a hard Brexit, then the Bank of England would really have to think long and hard. Now, I think Guy is correct. I think the market assumes that if we had sterling fall lower and we had a disorderly Brexit, that would be very detrimental to the UK economy. And the Bank of England would be unlikely to hike interest rates in that scenario, you would think. However, the bank have left that option on the table. They've continued to say that rates could go in either direction, and I think what would really be the thing that would change it for them would be if inflation expectations began to spike higher. Now, there's no indication that that would happen, but if inflation expectations did move higher, and that would probably only happen after a prolonged period in the UK of several months, say, of higher inflation, that's when they may have to react to try and bring inflation and sterling back into line.